How's it going, everyone? My name's Kyle Hurley. I'm a private wealth advisor here at Monroe Morrow Wealth Management, joined by my partner, Jon Coughlin. How we doing, John?
I'm not doing so bad today. Wish this rain would stop. But besides that, in the stock market, not bad.
So to John's point, and I'm sure a lot of you guys are feeling the same way. What a year it's been to be an investor. It has not been a fun year. S&P 500 is down around that 20% mark again, and we're kind of getting close to that June low that the S&P 500 saw. So there's a lot of things going on, a lot of negative headlines, and this type of year can really test you as an investor. You kind of find out a lot about yourself. So me and John wanted to put together a quick video, highlight some of the mindsets and habits that we try and implement and we try and tell our clients to help them kind of navigate a tough year like this. So for those that don't know, the Federal Reserve raised interest rates again yesterday by 75 basis points. So again, what they are doing is they are trying to break the back of inflation, bring down prices, even if that means sacrificing growth. They don't care about the pain that you and I are feeling. Their job is to make sure that inflation stays in check, because ultimately, when inflation's running high, everybody loses for the most part. And so what we wanted to show you, we actually received some leaked footage of Jay Powell leaving the stage yesterday after his announcement.
You like that? You like that?
We certainly did not like that, Jay. And neither did the stock market. It was a tough day again yesterday. It's been very chaotic, very volatile. So what we want to do is remind you of what a local legend, Peter Lynch, once said. The real key to making money in stocks is not to get scared out of them, right? So we can all sit here and we can say, be fearful when others are greedy, buy the dip. I'm going to do this when the market hits this. But then all of a sudden you can throw the bullshit flag on people, right? You start to have that gut feeling of like almost nauseousness when you see your accounts do what they're doing this year. No one's really having fun in the stock market, but it comes back to the importance of this is a long-term game. Stop becoming so focused. You can't be too focused on short-term pricing, right? When you read these headlines, they almost make me believe that the world is ending. But if that's the case, then the last thing I'm worried about is how my portfolio is doing. So the real key to making money in the stock market is to not get scared out of it. Stay to the plan. Another chart that we want, or some analysis we wanted to highlight. So Nick Murray's been a financial advisor in our industry for about 50 years. What his team does is they've done some research going back all the way to 1926 through 2021, and they wanted to assess what's the likelihood that I make money in a given year if I invest in the S&P 500. So for example, if I were to put money in the S&P 500 for 12 months, 1 year, what's the likelihood I finish that year in the green? It actually comes out to around 76%. Now, I know past performance is not indicative of future results, yada, yada, yada. But this is a probability game. You've heard us say it before. There are no guarantees when it comes to investing. It's a game of probabilities. I mean, if you were to look down at the 15 year and 20 year, if I'm in the S&P 500 for 20 years, going back on history here, there's 100% chance that I make money. I mean, I'm not a gambling man. I'll leave that up to John and his friends there, but I like that game and I'll play it all day long. John, you want to take it from here?
Yeah, thank you, Kyle. Yeah, you know what? I do like to gamble a little bit. Very, very safely and responsibly, though, on the side. It's always darkest before dawn. So what this is going to show is over the past 20 years, from 2002 to 2022, if you had stayed fully invested through all these periods, dot-com bubble, 2008, 2011, 2016, 2018, COVID, you name it, you'd have made 9.4% in the S&P 500. So that's the person that doesn't try to time the market, doesn't try to go to cash when things look bad, the news is screaming the world's going to end. You stay fully invested, hold on to your stocks. You make 9.4%, everything's great, everybody's happy. If you miss just the 10 best days over those 20 years, you cut that return in half to 5.2%. Miss the best 20 days, 2.5%, and you miss the best 30 days, you almost don't make any money. You would be better off keeping it in a high yield savings account or buying government bonds or something like that, rather than trying to take risks in the stock market. So just an example of why it's important to stay invested. It's tough to do. It's emotional. The stock market's very volatile this year. It's easier said than done, but this is a great example of why staying invested, sticking to your plan pays off over the long run. So Kyle likes to say, don't do zero. That's a phrase that I'm actually trying to adopt from him. So thank you, Kyle. These are US Treasury yields. So because interest rates have come up so much, there's been some great opportunities lately, whether it's I bonds or buying Treasury bills, Treasury notes, Treasury bonds. These are government bonds that you purchase. They're guaranteed by the US government. So we like to think that there's not going to be an Armageddon and you can trust these. In all seriousness, I would buy these. These are a great investment. The 2-year note, if you can go down to that, Kyle, that's paying almost, that's actually, so it's been updated to over 4% with where rates have gone. So that's a great way. If you don't want to take risk, you've got cash in the bank, it's short term, or you just don't want to take the risk of putting in the stock market because of the outlook right now. This is another great alternative. Make 4% per year on a 2-year guaranteed government bond is a solid opportunity to take advantage of if you're looking to get that cash working harder for you. Another option, so for really short-term cash, your emergency fund, 3 to 6 months of the money that you need for your everyday expenses, and then some. Your sideline cash, whatever you want to call it. These are high-yield savings accounts. So simply put, they just earn a high interest rate. Bank of America pays like 0.05%. These are great. They're all earning about 2%. I use Marcus by Goldman Sachs. Any of these are great options. FDIC insured, free to use, as far as I know, for most of these. Completely liquid. So government bonds, you got to hold those for the term, depending on how you buy those. These are just a savings account that you can move the money as you please, and you're going to get that cash working harder for you. Why not take the free money? They're offering you this almost 2% yield across the board here to just leave your cash over there, and you're not giving anything up. So don't do zero. That's kind of the main takeaway here. Thank you guys for joining us. Hopefully that was helpful. The biggest thing, the Peter Lynch example that I'd like to talk about is that's a great quote by Peter Lynch. He had a fund called the Magellan Fund, for those of you that don't know, that maybe lived under a rock. It returned over 20% per year when he was managing that fund, which is unbelievable. Yet most of the retail investors that bought that fund lost money because they bought high and sold low. It's so hard to stick to your plan when things get emotional. So try to stick to your plan. If you have questions, reach out to us.
I would echo that point.
Yeah.
I would echo that point, John. It's so hard to stay rational under uncertainty, right? I mean, you hear all the things that go on. It's so hard to predict. I mean, a line that me and you hear a lot, and we absolutely hate it, but we understand is, oh, I'll just get back in when things are better. Number one, no, you won't. And number two, who the hell knows when that's going to be? Me and John have no clue. Warren Buffett doesn't know. Hell, Jerome Powell has no clue. Maybe Congress does, or Pelosi's husband does. Maybe we should start fading him. But at the end of the day, nobody knows. So to John's point, the key to a successful investment journey is creating a plan. What are the goals that you're trying to achieve? Sticking to the plan, and then turning up the dials along the way, right? I mean, it's been a really tough year. It's probably going to, get a lot worse before it gets better. But at the end of the day, we are long-term investors. We are goal-based investors. I'm not trying to day trade. If that's your game, it's a judge-free zone, but that's not me. So, test yourself, understand that everyone's going through this, and things will get better eventually. Just who the hell knows when. So
things will get better. Things will get better.
Yeah. To John's point, thanks for watching. And if you guys have any questions, we're happy to do complimentary meetings any day, all day. So please reach out to us. Take care, everyone. Thank you.
Thanks.